Hey all, welcome to ShareTrack. This is Raj here. Friends, I had a brilliant idea today. I think it's a brilliant idea. You guys have to tell me what it is. I thought that since we have come to half of the year, let us look at the performance of the stocks in our Genomic watch list and find out the top 5, bottom 5, and the most volatile stock that we have. And then I would like to get feedback from you as to what it looks like in your portfolio. And I'm going to explain all the data points. I have taken data points in terms of variance of price in the stock from opening on the first day of January to now. And then I have also looked at opening to peak during this year, opening to bottom during this year, and the difference between the peak and bottom to judge the volatility of the stock. So it's a very interesting mix and it won't take too much of a time. That's what we are planning to do today. So let's get started. Welcome back, friends. So I've used the TradingView platform to compile all this data, and there could be minor variations in my opening price and all, maybe a few cents here and a few cents there, or a few percentage points, decimal points here and there. That's because the cursor is not always accurate, but overall it's the integrity of the data is pretty good. I'll be using a spreadsheet that I prepared and I'll walk you through it. And intermittently, I'll also use the TradingView platform in order to demonstrate why a top 5 stock, as per my analysis, may be in your portfolio and it could still be red in your portfolio. I'll explain that to you. And also why a bottom 5 stock in our portfolio is likely to be green in your portfolio, even though it's one of the most horrible stocks in our watch list. So let's get to my spreadsheet first, and I'll first give you the top 5 companies, the bottom 5 companies, and then we'll get into the spreadsheet to look at the peculiarities and why there could be anomalies, difference between what I see here and what you see in your portfolio. So let me take you to the spreadsheet first. Here is my spreadsheet. And all the companies that you see here with a red cell out here indicates that they have not done well this year. This column is change from open, which means this is the change in the price from its opening price on January for that stock to what it closed on as of last Friday. So that's the difference. So if you see here, Schrodinger is at 183.05%. And Schrodinger has had a negative of just 5.71, year-to-date low of just 5.71%. And that too, it happened within the first 15 days of January. After that, the stock has not looked back at all. And its year-to-date high from open was 172.90 before it reached the latest price, which is 183.05. because it's been breaking the year-to-date highs at this point of time. Michael Methoff is one of our subscribers who brought this stock to our attention, and I am 100% sure that Michael has got this in his portfolio. And I'm very keen to know how much profit he has made on this. Of course, not in dollar terms, but in percentage terms. It would be very interesting to see that. I'm just going to briefly get into the TradingView platform in order to illustrate this point. So if you look at the chart out here, I'm going to get into Schrodinger. Now, Schrodinger, let us do the YTD year to date so that we have everything from 1st of January onwards. And each of these candles is a one-day candle. And as you can see, friends, we opened somewhere around 18.22 and the drop of 5% was to 17.52. And that happened by around 6th of January. After that, this stock has not looked back at all, and it had a very, very strong cup and handle pattern, which led to and exceeded our target. Our target was at 45.03. We have met and exceeded that. And as I can tell you, the previous high was around 48.86, but the latest high is at 51.34. So it has touched the highs and it's doing extremely well. So anyone who had bought Schrodinger somewhere at the beginning of the year would definitely have made profit, and someone who had bought Schrodinger somewhere around 6th of January would be making the maximum possible profit someone could have made with this particular share. Now let us get back into our spreadsheet and have a quick look at the second best performing share. The second best performing share happens to be PACB. and PSEB had a gain of 67.34 since the beginning of the year to now. So it has done extremely well. And again, PSEB has been doing pretty good in terms of its trajectory, and it has been consistently going up. It has not had a single day when it went below its opening price of January 2023, of 1st January 2023. It's not gone down at all below that. That's why you have a dash in the column out here. So PSEB did extremely well. Those of you who had PSEB have done very good. However, here I would like to explain to you another concept which you should keep in mind, which will explain why a particular share may look as very good in our chart out here and stand as the top 5 best performing shares, and yet it may be in the red in your portfolio. For example, if you were to have bought PSEB somewhere around 13th of June at a price of 14.30, at this point of time you are looking at a loss because the price is at around 13.30. So anytime that you had bought this, say between 6th of June all the way up to 13th of June, you are definitely looking at a loss. However, if you had bought it at the beginning of the year, you are looking at a profit. Similarly, if you had bought it somewhere around 18th of Jan 2023, you are still looking at a profit because overall the trajectory is up. It's on a bull channel. So it's looking pretty good. The scariest one among these things is Sarepta, because look at the chart out here. There are so many ways you can go wrong. There are so many gap ups and gap downs. Probably nobody knows what the hell is happening with Sarepta. But then coming back to our spreadsheet, I would like to point the third best company that we have in our watch list. It is CRISPR Therapeutics. It had a gain of 40.82% from year to date. From the beginning of the year, whatever price it started at the beginning of year, it has gained 40.82%. So it's again one of the top 5 performers. It is sitting at number 3. And number 4 is IMTX, coming in at 37.24% gain from the start of the year. So this is again excellent performance out here. And the 5th place goes to Intelia with a gain of 20.07%. And our DNA, I never thought DNA would come maybe 6th. It has come very close to the top 5. It has a gain of 17.49%, believe it or not, from the beginning of the year. And at this point of time, it's up 17.49 from the 1st of January when it opened, debuted this year. So those are your top 5 shares. Next, I'm going to talk to you about the bottom 5 shares. So if you look at the bottom 5 stocks, we have got SQZ Biotech with 62.67% drop in price compared to the opening. And that indicates to me that this is the worst performing share. And also the difference between its year-to-date high and year-to-date low from the opening is very, very different. Like it has got a high of 40.90 from opening and a low of minus 65.13 from opening. So this shows a very high degree of volatility. And we also have some news for SQZ Biotech. And we have a news here that says that SQZ Biotech is going to implement a 1-to-10 reverse stock split. Friends, I got tired of talking about reverse stock split for quite a while, and then I gave up on it. But now they have come up with this official press release, and they are saying that they are going to do a reverse stock split of 1-to-10, which means 10 stocks will get together and become one stock. So multiply the current stock price by 10. That's going to be the price of the new stock. And they said that they have been notified that they are in non-compliance with NYSE rules because its average global market value over a consecutive 30 trading day period and last reported stockholders' equity were both less than $50 million. The company said it will submit a plan to cure the deficiency and regain compliance with the requirements. Shares of SQZ were up 5% in the after-hours trading activity. So that's the news on SQZ Biotech, and it has been a very volatile stock and it has dropped a lot. So that's what I have to say with regard to SQZ Biotech, which is one of the worst performing stocks in our watch list. Next comes Bionano Genomics, and Bionano Genomics dropped 55.92%. Again, it has got a high degree of volatility, almost equivalent to SQZ. It had a high year to date of 40.27 and a low year to date of 61.97 as compared to the opening price. So that shows a wide range of fluctuation. So that's the second worst stock, and it's also the second most volatile stock. Third in this category comes Bluebird Bio. I don't think it's going to stay in this list in the next 6 months. I think it's going to come out of this and go into the top 5. That's my opinion, not financial advice. Bluebird has dropped 52.78% from open. It opened at $6.92 at the beginning of the year. Since then, it has fallen 52.78% as of close of market on Friday last. So that gives it the position of third worst performing share. However, it has not been as volatile as SQZ Biotech or Bionano Genomics. Next in line is Invitae, which has come in at a negative of 36.88. And again, it has been very volatile. Year-to-date high of 59.47% compared to the opening price, and year-to-date low of 44.12% compared to the opening price. This is huge range of volatility, not at all looking good. So that was Invitae for you, which was close number 4. And the close number 5 comes Caribou Biosciences, which has dropped 35.83%. And again, it has been volatile, but not as badly volatile as Invitae, but still quite volatile. It has lost 35.38% value from the opening price of 6.44 on the 1st of January. So this, my friends, rounds up the top 5 stocks, the bottom 5 stocks, as well as the most volatile stock, which in my opinion is SQZ Biotech. Well, friends, that was my quick analysis of our genomic watch list. And I would like to hear back from you whether you had invested in any of these top 5 companies or were unfortunate to invest in the bottom 5 companies, or maybe the results that you see in your portfolio are totally contrary to what I have here. Maybe you have the bottom 5 companies or the worst performing companies in our watch list, and yet you are profitable. It'll be interesting to know. So just put it in the comment, and I would enjoy reading your comments and take some pleasure in all the money that you make in your portfolio. With that, I'd like to bring this video to an end. I hope you guys have a great weekend. And to the American friends out there, happy 4th of July. I hope you have a great weekend. And I'll catch up with you again in the next video. Bye for now.